This chart shows GDP growth for each half of the year, going back to 2022, all positive. But here's what happens when you take away information processing equipment and software. Those numbers get a lot smaller. GDP growth for the first half of 2025 falls from over 2% down to just 0.1%. That's right, without data center investment, US GDP growth in the first half of 2025 was near recession territory. These calculations were done by Harvard economist Jason Furman, who also pointed out investment in information processing equipment and software is 4% of GDP, but it was responsible for 92% of GDP growth in the first half of this year. This has raised some big questions about just how much big-ticket spending by large companies could be gussying up an ailing economy. This is the contribution to US GDP growth from consumer spending by quarter going back to 2022. You can see it's sharply tailed off since Q4 of 2024, but here's the kicker. This other line is the contribution to GDP growth from investment in IT equipment, largely data centers, and it's risen quite rapidly over the first half of 2025. Fixed investment into IT equipment and software rose by nearly 30% on year in the first half of 2025, up from just 5% growth in the second half of 2024. And much of this is going to build massive data centers, such as OpenAI's Project Stargate. Global spending on data centers is projected to grow to $3 trillion by 2028, and that huge wave of spending may be disguising some underlying issues with the economy. And for the first time ever in 2025, spending on data center construction made up a bigger chunk of US GDP growth than consumer spending. And this chart drives home just how much the economy has transformed over the past half-decade. Just 4 years ago, US companies spent 7 times more money constructing offices than data centers. Today, they're nearly 1-to-1, and that surge in data center construction reveals an unprecedented large-cap shopping spree that's driving the economy today.